I want to thank everybody for coming on to the National Credit Educational Services Conference call. It is definitely my honor to be able to present to people, to help people to understand, what is going on in America today, especially when it deals with your credit, when it deals with things that people may not be able to see, just may not be able to really understand what's really going on around you dealing with credit. It is one of the most serious subjects in America today. I mean, again, the way this country is beginning to divide itself to, it's almost one side against the other. And what people don't realize is that either you on one side, no matter what religion, no matter what complexion you are all on one side. If the powerful side is against the poor, the middle class, you are on all in the same pot. And if you're rich, then you're in that pot. And the thing about it is that we just have to, everybody needs to come together and understand, even as individuals, the power and be able to look beyond things, be able to see what's going on when someone is clearly not just telling you what's going on. You can see what's going on because of the actions that are being taken against people, in America. I mean, and one of the biggest things right now is going on is pretty much fresh off the press is how they're dealing with student loans. Student loans have already been put in a position to where they have power almost like the IRS, to where they can garnish your wages and attack your checking account and do things like that. And now it's getting even more serious to where now they can revoke your license, like your driver's license. Anybody who's a firefighter, a barber, an attorney, nurses, anybody who has a license of any form. I mean, even the barber's license, the massage therapist license, firefighters, no matter who you are, they can revoke your license and you lose your job. And even if you start getting your student loans back on track, they leave it on your record to show that your license has been revoked and it was because of your student loans. Therefore, a lot of people may not want to hire you because your license has been revoked before. You know what that creates? That creates a liability to whoever wants to hire you. So therefore, there is no reason for us to continue to stay behind the game. We have to stay in front of the game. We have to make people conscious about everything that they deal with. I have said so many times on these calls, it is not hard to deal with the IRS. It is not hard to deal with your student loans. But if you don't pick up the phone or if you don't answer these letters, then that's when it becomes difficult dealing with anybody, because when you ignore these folks when they're trying to communicate to you, whether it's the IRS or it's the student loan people, then they're going to grab your attention because now they have the power. I don't know where they got it from. I don't know who gave them this power to be able to take jobs away from people in America. I thought we were supposed to be making America great again. I thought we were supposed to be bringing jobs to America, not taking jobs away from America, not making people not motivated to go to college because they may have a situation to where they can't pay, and then somebody makes a decision to go ahead and just put something in on your license, whether you're an attorney, whether you're a barber, whether you're a firefighter, whether you nurse or whatever your occupation is that requires a license, that and your driver's license, which your job can be attached to that. I mean, come on. How can you take the ability of someone to be able to work because of these situations? So apparently it's getting tougher. And so therefore, here's how we deal with these student loans. As we talked about before, when President Obama was in office, he passed this law to a Student Loans Affordable Act to make student loans affordable. But he was only able to get that done with government loans. So with government loans, here's how I feel about a student loan. If I owe $70,000 on a student loan, I make $40,000 a year. I really don't have the ability to probably ever pay that thing off. But as long as you allow me to pay you $50 a month, I'm cool with it. I'm totally cool with it. Because Whether I ever pay it off or not, I just know you're off my back for $50 a month. I'm giving you $600 a year. And, in 10 years, I gave you $6,000. Whether it takes 30 years to pay for it, fine. Hopefully there'll be a forgiveness period within that time. And the forgiveness periods for student loans now is like 20 years in my understanding. And so, therefore, eventually that student loan can be forgiven. Or I can go get a job somewhere, working for a city school or working as a police officer or working somewhere to where or working in an urban area where they have a forgiveness for student loan in that situation. Or you can join the reserves, the Army National Guard or something, to where they have student loan forgiveness programs or pay for college to help to offset some of these other payments that you have for school. So until you can figure out some other kind of way to help to forgive some of these student loans, in the meantime, we're going to have to work it out. Because if you don't work it out, you can't wait for something to happen. You have to be preventative. You don't want it to happen and then chase it. You want to be in front of it so you don't have to go and try to correct things, because you don't want this information to hit your license or take your licenses away from you. So therefore, the key thing is to pick up the phone. If you've been out of school, then pick up the phone and just let these people know that, look, I want to either rehabilitate my student loan if it's a government loan. I wanted to get it back on track. What can I do to rehabilitate it? What can I do to start making payments with you again? They're going to ask you, how much do you make, et cetera, and different things like that. You tell them what it is that you earn, okay? But with the government loans, I've seen people pay as little as $0. That's fine. But guess what? They picked up the phone to communicate with them. Once they did that, then they didn't even really have a payment to make. It was a zero loan situation. I've seen people pay $1 or $5 or $25 or $50, just to get this thing going current, paid as agreed, to where nobody is harassing you, nobody is adding this negative information onto your credit report or creating judgments and creating people to take your license. Now, when it comes down to private loans, those are a lot harder. Those are the people that is probably really creating the chaos when you go get a private loan. First of all, when you go to school again, or if you're going to school, or you're going to co-sign for your kid to go to school, do your best to stay away from those private loans. Do your best to leave those things alone, because they offer no mercy, zero mercy whatsoever. Try to get these public loans, the government loans, like Navient or FIA or grants or, things like that, to where, these are government loans. So make sure that when you go to enroll in school, tell them I only want to enroll for government loans. I don't want to enroll for anything else because of the cost of, just because of the liability of private loans. The liability is too high. But to deal with these private loans, again, what you have to do is you have to show them your budget. You have to show them what you're earning, what your mortgage or rent is, what your car insurance, your cell phone, your utilities, all of your bills. You have to lay them out perfectly. Even if you have to show them your pay stubs, fine, who cares? Here's exactly what I make. I make $1,472 every 2 weeks. This is what I bring home. It comes out to about $2,944 a month. That's exactly what I earn. But out of this $2,944 I make, I'm spending $2,800. I have $144 left. I am asking you to please accept. I can pay you $100 or $144, what is left, for the next 12 months, and then we can go and review it to see if I'm making more money at that time. But this is what I make. This is the only how you're going to intelligently be able to negotiate with private loans, because they're going to assume that you have $600-700 per month to pay for this loan. And that's the way that they feel about it. They loan the money. They want their money. But if you don't have that money, the beautiful thing about these loans is there was never a designated amount that they told you when you took on these loans that you would have to pay back. There was never a designated amount by telling you that when you graduate, this loan is going to cost you $850 a month. Well, if you knew that, you probably wouldn't take it. So anytime somebody gives you a loan, like whether it's an auto loan or it's a mortgage or if it's a line of credit, they let you know what your monthly payment's going to be. Well, the student loan people don't do that. They just loan you whatever it costs you for that year to go to school, but you have no idea what the monthly payment. So therefore, since you never knew what the monthly payment could add up to, the only thing that can happen is that you have to negotiate your monthly payment. But you're going to have to come with facts. You can't come by just saying, I ain't got it or I can't pay it. They're going to tell you, I demand that you give me this. We want $556 a month. I can't pay it. Well, that's not good enough information that you can't pay it. Show them why you can't pay it, and break down your information. Send them an attachment or send them a breakdown of your finances. Attach your pay stubs, if they ask for it. Don't just submit that information, but just if they ask for it, give it to them. Give it to them. Because the bottom line is you are communicating with them. They cannot take your money if you're communicating with them. They cannot force you to pay more money than you actually have because they cannot evict you out of your home by telling you, I don't care that you pay $1,200 for rent. I don't care that you have to have a 3-bedroom because you have X amount of kids. I don't care. No, you have to care because that's what it is. And you never gave me what my payment would be before you gave me this loan. So that's the facts. So I don't want you to be afraid to communicate with your student loan people before they take your driver's license. And once they take your driver's license, you got a problem. Your insurance is going to fall off. Then you got to get to work. Then if you get caught, you got more issues with driving with a revoked, not suspended, but revoked driver's license. That could give you even more time. So I just want people to begin to start taking this whole situation seriously about your credit. The only how we're going to really be able to compete in America, to be able to really to make our lives great again, to bring back an opportunity for ourselves, is that we're going to have to really devote ourselves to a better understanding of credit and a better picture of how credit needs to look in our lives and affect our lives. So basically what I want to talk to people about next is to be able to understand how credit works with yourselves. One of the biggest things that really hurts your credit report outside of bad credit, outside of having public record like bankruptcies, tax lien judgments, garnishments, outside of having medical collections, evictions, checks, stuff from attorneys on your credit report, or even having repossessions, charge-offs, defaulted student loans, and, all these other things that head into your trade line category. All these are all major issues dealing with your credit. But what affects your credit even greater, or not greater, but as much, is having credit cards and having these credit cards maxed out. It is really some of the poorest behavior that you can have on your credit report. The reason why is that you are revealing to the lenders and financial institutions who you try to borrow money from is how you're living. Why would I loan you any money if you have a $1,000 credit card and your balance is at $998? Why would I loan you anything? You're already showing me through your credit report that you're maxed out. You can't afford no more. You're living all the way to your end. You're already showing me this. So therefore, why would I loan you any more money? I will not. And if I do, it's going to be under a very poor circumstance. So you don't want to have your credit reports looking like that. It's a behavior that FICO creates a credit score off of the behavior on your credit report, and they take an evaluation of your behavior, and then they turn around and create a credit score off of the information that they're seeing on your credit report. So it is so important to not have high credit card balances. High credit card balances is worth a negative 30% to your credit score. It's a major, major factor that you can easily eliminate and not have because of those facts. Now, also, when you go to pay your credit card, you have to understand, for those who've heard me say this before, be patient because it's important for those who have not heard it. Basically, how this works is when you go to make your credit card payment, you say, I'm going to get this credit card paid down, but then I got to use it again because I drive a tractor trailer. I need it for my gas. Well, you need to hold off on your gas. You need to hold off and use a debit card or use some other kind of forms of paying until you reach your cycle date on that credit card. So that credit card can report what your balance really is. So your billing date when the credit card payment is due is on the 16th of the month, but your cycle date when the credit card actually reports to the credit reporting agency is on the 21st of the month, 5 days later. So what that means is that when you make your payment, you get a $1,000 card, you get a balance of $998. You pay them $900. So really you should only have a balance of not $98, but you turn around and use $700 on the 18th and 19th because you're running a tractor trailer through the country, or you needed to get supplies for your business, or you needed to do something. Well, whatever you built up between the 16th and the 21st, that's what they're going to report to the credit reporting agency that your balance is. They're not going to report that you paid your balance off on the 16th. They're going to report what your balance is up to the 21st. So if you run it back up, that's what they're going to report, and that's what's going to negatively affect your credit score. So you've got to leave the card alone until your cycle date has been completed. Once your cycle date's been completed, then yeah, you can run it all the way up to $1,000. But on your credit report, it's going to show a zero balance or like $98 balance out of a $1,000 credit limit. That's what helps your credit score by 30% in favor of what you're doing. So we have to understand how we're being judged so that we can appropriately deal with our credit a lot better. Be smarter. Don't continue to allow yourself to be used by the rich. You can't do it. Then when you miss a payment, like if you're late on a payment, that's worth 35% to your credit score. But what is late? So many people may not really understand what a late payment is. A late payment is not 10 days late. It is not 20 days late. It's not 25 days late. You late, you shouldn't do that, but you're not late with the credit reporting companies. You're paying a lot more interest on that particular account by paying it that late directly to the creditor. But when you're late with the credit reporting company is when you're 30 days late, like your auto loan or credit card or your mortgage. If your mortgage payment is due on the 3rd of the month, the 3rd of February, if you pay it on the 3rd of March, then you're 30 days late. That's when they're going to report one late payment on your credit report. That one late payment will drop your score by 60 points. It affects your credit report by 35% of your credit score is a late payment. Your high credit card balances affect your score by 30%. So say if you're having late payments, whether it's on a student loan, whether it's on, an auto loan, with 2 late payments, your score just dropped 120 points. Understand that this stuff stays on your credit report for 7 years, and it's going to affect your credit report for almost 7 years. It's going to lighten up as years go on, but it's still there, and you still won't reach the high credit scores because of these old previous late payments. That's why credit restoration is so important, that people get their credit restored the correct way. See, National Credit Educational Services understands the algorithms that create a credit score. It is a scientific study of how FICO looks at the credit report from the 3 major credit reporting agencies to create certain factors for them to be able to fully understand what this person's creditworthiness is. 98% of the lenders, banks, and financial institutions will use FICO to make a 15-second judgment on whether they're going to give you $50,000 or not. I'm talking about in cash. I'm talking about today, right now. 15 seconds. They can do it online. They don't have time to verify, do you really work at FedEx? Do you really make $80,000 a year at FedEx? Are you really an analysis engineer? They don't have time in 15 seconds to verify that. In 15 seconds, they're depending on what FICO tells them about you, whether you're going to get that money or not. In 15 seconds. So therefore, we should understand who FICO is. People who try to offer you credit repair and tell them about we're going to delete your foreclosure, we're going to delete your repo, we're going to delete your student loans, we're going to delete. If they do all that deleting, what do you got left for FICO to evaluate? You don't have anything. So people out here are doing credit repair senselessly and not intelligently. They're doing it off of what they think they should do. But if the banks and financial institutions depend on FICO to tell them what they should do, then you should operate with a company who understands credit restoration and restores credit around the FICO formula, not this reckless red X, delete foreclosure, red X, delete student loans. Man, if you delete my student loans, I will cut you. Because the reason why is these student loans is probably the most trade lines that a lot of people have on their credit report. I've seen people with 30 student loans and 20 student loans and 15 student loans. Now, what if you had all those trade lines and somebody deleted them all, or they were all in default and somebody reversed them all to paid as agreed, to never late? That's what you want, because now you got 15 positive trade lines that are 10 to 15 years old that's paid as agreed, never late. That takes your score from 480 to 740, 750 because of so many accounts are reporting positive. See, FICO doesn't look at what kind of account it is. They look at, was it paid as agreed? Yeah, 35%. They look at the balance. Well, they can't judge you so much on the balance because it's an installment loan. You can't judge on installment loans. What you can judge balances on are credit cards. Those are revolving loans. That consumer has all the power to control their revolving loans. You can max it out, or you can pay it off and use it smartly, or you can show how you live it. You can't judge me on my auto loan, my balances, because this auto loan is for 72 months. You can't judge me on my house because it's an installment loan. It's for 30 years. You know, you can't judge me on a certain type of credit, but you can judge me on my credit cards because I control those balances. So therefore, you're keeping your balances low. And then on your student loans, those are installment loans, so they take time. They can't judge on that. But where they can also judge you at is on your history. How long have you had these accounts? I had these accounts for 15 years. Well, that's worth 15% to your credit score because it's history. For 15 years, you've never been late. What is that worth? It's worth a whole lot to FICO's decision to let the banks know, go ahead and write them that check. Go ahead and give them that car at 0.9% financing. Give them as much car as they want to because we say, off of that credit score, we trust it wholeheartedly. FICO only loses 2% to the banks each year for foreclosures, for repossessions, for defaults on loans, period. So they trust FICO. They don't trust the three major credit reporting agencies' scores and how they create scores because the three major credit reporting agencies don't like each other. They compete against one another. They're not friends. And FICO is not friends with Equifax, Experian, or TransUnion because they're mad at FICO. They're mad at the banks because they're saying to the banks, we could create you these scores. But the banks say, I don't trust you. The only thing I trust about you is just reporting the credit, and I know you make mistakes with that too. But I'm trusting FICO with the score. So it's almost like a war between four companies. Nobody communicates. That's why people say, well, this bankruptcy came off of Experian, but it didn't come off of Equifax. It should have. No, it shouldn't. They're a separate company. They don't care. These three major credit reporting agencies is like Pepsi and Coke or like McDonald's and Burger King. You think they like each other? Heck no. They're competitors. So what we have to do is to understand, if we're going to fight in this army, we're going to compete in this America, we have to understand the rules to the game. If we don't, we're creating our own rules. We're doing bankruptcies with debt that's been beyond the statute of limitations. Sometimes we're setting up repayment plans with situations that we've already been forgiven for, and now we just renewed it. We're making so many bad judgments. Like I owe the IRS, so I can forget about buying a house. So I'm going to go ahead and renew my lease with these people for 5 years because I know the mortgage guy who didn't have the knowledge just told me, forget about it, you can't buy a house. Don't listen to that. Before you make any decision or anything that has to do with your prosperity and your family's prosperity or your future prosperity, come ask us first. Call us and ask us. Because with the IRS, all you got to do is set up a payment plan The same thing with the student loan that we were talking to you about. Just show them your budget. Show them what you can afford. The IRS is really cool people, believe it or not. They may talk tough, but they got laws that they got to go by. They cannot ruin your life just recklessly for no reason. They have to give you extensions. They have to give you time to get this paperwork that they're requesting together. Whether it's 30 days, 60 days, or 90 days, but whatever it is, they ain't going to touch your account for those days if they said they not. Then what you got to do is just get a budget into them. Show them what you make. Show them, what your W-2 is or what your pay stubs are. Show them your budget, your bills. Just get it over to them, and they will calculate what you can afford. They're not going to evict you like we talked about the student loans. They're not going to make you pay $600 when you only have $144 left in your pay. They're going to tell you to give us $105 a month, and you could owe the IRS $100,000. But they're going to tell you to give us $105 per month. And by doing that, and after you've paid the IRS 3 consecutive times, you have the letter that states that we got you into a payment program, then whether they have this lien on your credit report or not, but let us get it off. But whether it's still showing up on one of the credit reports out of the 3, and then all of a sudden your mortgage comes to a halt, and they say, hey, wait a minute, you need to satisfy this IRS lien. They say you owe $100,000, and they said it is unsatisfied. All you got to do is show them that letter, show them 3 payments that you made with them, and they said, oh, no problem. You can go ahead and move forward. You'll be closing on Friday. Thank you very much. Sorry for the inconvenience. But somebody else told you can't. Somebody else told you that if you don't get this deleted, there's nothing else you can do. But we can do it. We can get it deleted. We can get it deleted. You don't know what you can do. You're going to try. But the thing about it is, it's all about the education that will take you over the top and to help you to get to your goals of what you want to do. And that's what separates credit repair versus credit restoration. Credit restoration should have education. It should know what it's doing. It should not recklessly delete things that could help your credit score. Credit restoration should be a science just like FICO is. Just like they study the formula of your behavior to let the banks know, the National Credit Educational Service is going to study each and every one of your credit reports to understand what is the peak ability that you can have to have the highest credit score possible. And then every Monday night at 7:30, we're going to educate you about credit. So, ladies and gentlemen, it is our time to really show ourselves, to have the year that we want to have. People that's getting their tax return, don't give it to the car dealership that you got to pay $4,000 down. Just wait 35 to 45 days. You've been waiting. Wait 35 to 45 more days. Go get your $2,500 Honda Accord in the meantime, something that you can go and turn right back around 45 days later and sell it for $3,500, even more than what you paid for. And then go get your car at no money down. And then take the rest $6,000 or $7,000 of your tax return and put it down on the house. Put it down on the house, something that now you can have that's yours. When you go to closing and you have the understanding that somebody just approved me for $165,000, my mortgage payment is going to be $975, cheaper than the rent that I was paying. I'm in a better school district. My kids can go to better schools, better playgrounds, more activities, better grocery stores, better restaurants, better facilities, better everything. I'm out of here. And now you just begin to raise your own game. You start, that stuff hits your credit report, it starts raising your score. It shows that you got a mortgage. It shows that you're paying that mortgage on time. Then people will start giving you other things. But you have to make a commitment and go with somebody who's going to truly help you to advance your life and has the ability, the academic ability and finances to be able to help you to know how to navigate and not make mistakes and not do things that will hold you back for years to come. Bad credit decisions. You got a judgment. You go to work. You got called down to HR. They said we're going to be taking 15 to 25% of your gross wages. You go back to work, go back to your office. They say, what's wrong with you? They just gave me a judgment. Oh, you know how to take care of that. Nah, how? Just go do a bankruptcy. That's done. That bankruptcy is a 10-year penalty. It's something that should not have been done. There's other things that you could do. Talk to us first. Talk to us who have the knowledge to tell you what to do. We're going to open up this call right now. Any questions or comments? Here we go.